And crude oil is also rising today as the dollar drops to a 15-month low against the euro, and also as Americans do take to the road for the holiday weekend. An Energy Department report showed consumption of gasoline and other fuels climbed 2.8% in the past 2 weeks. Joining me now is Fadel Gheit. He's Managing Director of Oil and Gas Research at Oppenheimer. Fadel, obviously have a lot of cross currents going on with energy, but the dollar it seems to be foremost in most folks' minds. So does that mean if the dollar's going to keep falling that oil's just going to keep going up?
Well, I'm not sure that oil is going to keep going up. Oil, as it is at least inflated, in my view, by at least 20%. But will remain inflated because of factors other than supply and demand fundamentals. There is no shortage of oil. There is oversupply. The economy is still sputtering, so the demand is weak and will remain weak. And even when the economy picks up steam, we are not going to return to the 3 or 4% increase in demand on an annual basis. People will conserve, will use less energy and less oil. But basically what we see here is that oil prices are driven by speculation. The same financial players are still at it again. The government is not doing anything about it. And again, you have weak dollar, means higher oil prices.
Well, what's going to happen to potentially change that? What kind of catalyst could come along to change that direction?
Well, it's really very simple. If we have more aggressive regulators that will at least cool off the speculation, I think we are going to see lower oil prices. Weaker dollar obviously push oil prices higher. And then you have global tension. Are we going to bomb Iran? Is Israel going to bomb Iran? We've been at it for the last year or so. And again, that is basically fabricated by financial players to keep people up on their toes and make money.
Fadel, are any of those things going to change, though?
Well, I'm not sure. I mean, the president promised change, but we haven't seen any changes yet. So we'll see. We're still patient. We'll be with him until we see change. I don't hope, and I don't think for too much changes. Basically, this is the way it is. People have to live with the current situation, have to accept that oil prices will remain inflated. We cannot afford much lower oil prices because that could stabilize some of the countries in the Middle East, and that will be the worst case situation. It is not causing us any harm. There is no push in inflation. Russia wants $65 oil. Saudi Arabia wants $70 oil. So more or less, the world has accepted the $70 oil. It's too much for my taste. I think oil prices should be higher than $50, but it is what it is.
All of that said, how high do you think, I mean, even if you think prices should be at a certain level, realistically, given supply and demand, how high do you think they're going to get?
Well, we can push oil prices as much as the financial player that pushed oil prices to $147 last year, and we're predicting $200. If we allow them more room, they will take us there in a heartbeat. But having said that, I don't think that the global economy can sustain much higher oil prices. I don't think that there is need for higher oil prices. But natural gas is cheap. Natural gas is ours. It's in tremendous, we have incredible supply. It's very economic at reasonable prices. Oil prices are now 15 times natural gas prices, where they should be between 8 and 10 times. So oil prices, in my view, are inflated. Natural gas prices are very depressed.
Well, so what do you think is going, just as I asked what's going to be the catalyst for a decline in oil, what's going to be a catalyst for more of a rebound? I mean, we've had a very small rebound in natural gas, but what could be a driver for more of one?
Again, it's a matter of time. When oil prices were rising, I said it's a matter of time before oil prices will correct, and they did correct. I didn't know when and how, but it did happen. This is a commodity, and commodities cannot go in one direction forever. There has to be some correction along the way. Natural gas prices, in my view, are not sustainable at the current level because you are going to see lower capital spending. You are going to see finally supply response to the lower prices. Companies are not interested in throwing good money after bad. So we are going to be capital rationing that will bring capital spending down, that will bring production down. Production will decline sharply in the beginning of next year.